Well, there is an ownership shift at Alipay. This is a unit of Alibaba Group, and that sent shares of Yahoo down 7% yesterday. Paul Meeks says Yahoo investors shouldn't panic. He is an analyst at Capstone Investments. He's joining us now on the phone from Charleston, South Carolina. Paul, thanks for being with us. Yahoo owns 43% of Alibaba Group. This is the Chinese internet company. What if China prohibits foreign ownership of an online pay company and Alipay has to go 100% to a Chinese entity? What is the likelihood of that happening? That seems like it would be horrible for Yahoo.
Well, first of all, I think it's very likely that's going to happen. I think it's actually already happened. But this is not unusual for Chinese companies that deal with foreign entities. First of all, Alipay has to become 100% at least domestic owned because it's a finance company handling money in China, and that's the rule. So if you think about it, if they didn't go through this process, there would be no value at all to Alipay because they wouldn't be in business.
So what does this mean in the fact that Jack Ma, who is the CEO of Alibaba Group, I mean, he now has all the power and all the leverage and Yahoo has nothing?
I think that he does have incremental leverage, but on the other hand, going into this transaction, not only Yahoo but SoftBank owned a combined 70% of this enterprise. And so what I think happens, the negotiations continue. We have no deadline to when they will conclude, so we can't wait for a specific date. But suffice it to say, I think that, quote-unquote, officially, we'll have this transition in ownership, but economically, where it pertains to Yahoo shareholders, there won't be that much of a change.
So back in 2005, I mean, Yahoo invested $1 billion. They got this 39% stake in Alibaba. I mean, is this still a good investment? I mean, Yahoo doesn't have any control really over this market, and it's a pretty big market.
I think they do have not theoretical control, but practical control. And then the other thing you have to realize about the whole Ali Group empire is that it's not just Alipay. You also have Taobao, which is Chinese biggest B2C site. And I think there is a whole lot of value, in addition to Alipay, under the umbrella private and public companies of this enterprise. And if you take a look at even the most recent statistics for these businesses in China, the most recent quarter's growth, either revenues or profits, have been explosive and continue to be incrementally faster.
Should Yahoo, though, Paul, be further along by now? I mean, should Yahoo at least have a seat on the board at Alibaba Group?
Well, one of the options that they have is they can bring with SoftBank an incremental board member, and so there is strong influence there. I think a lot of this, again, is, I don't want to say cosmetic, it's more serious than that, and we'll get more details. But the economic shift away from Yahoo and SoftBank, frankly, I don't think has happened or will happen.
Paul, just one last question on tone. How do you think the two companies get along? I mean, they've had a pretty tense relationship over the years. Do you think it's improved any in the past year or not changed at all?
I think it's probably not changed at all. There always has been a little bit of a acrimonious relationship. You know, it's easy to make an investment when prices are relatively low, but now that we're going through another internet bubble, in my opinion, in the United States and abroad, you have a situation where, boy, I'd love to have more of that value in my own pocket, and so that's going to cause some strife. But I think it's still a pretty good relationship. And remember, legally and economically, none of this really changes much.
All right, Paul, and you still have your buy on Yahoo. We thank you very much. Paul Meeks, he is a senior equity analyst at Capstone Investments, saying there is an internet bubble, and if Yahoo owns even part of that Alibaba Group, it still equals good returns for Yahoo shareholders.